Welcome to the Leaders Insights podcast. Today's episode, the CFO as Chief Narrative Officer, redefining investor relations strategy. Most CFOs I talk to treat investor relations like a compliance chore. You're telling me they're leaving money on the table. How much?
A lot. Two companies with identical earnings can trade at a 2 to 3 point difference in cost of equity. The return investors demand to hold your stock, purely because one explains itself well, and the other reads its numbers out loud like a hostage.
That sounds like a nice story. Prove it isn't just charisma dressed up as finance.
Look at what happened to companies that stopped giving quarterly guidance and started giving a framework instead. Unilever ditched quarterly profit forecasts back in 2017, and their shareholder base got longer term. Turnover fell. Netflix rebuilt its whole investor letter around engagement metrics after the 2022 subscriber shock, and the multiple recovered faster than the fundamentals did. Narrative moved the price before the cash flow caught up.
Or the market just forgave them. You're crediting the storyteller for the weather.
Fair pushback, but the mechanism is measurable. When your disclosure is vague, analysts widen their forecast range. Wider range means higher perceived risk. Higher perceived risk means investors discount you harder. There's academic work. The accounting literature calls it the bid-ask spread effect, showing firms with clearer disclosure literally trade cheaper to buy and sell. Lower friction, lower cost of capital. That's not charisma, that's plumbing.
So what's the single thing everyone gets wrong?
They confuse transparency with volume. CFOs think more slides equals more trust. The opposite. I've seen a 90-page investor deck that told you nothing and a 12-page letter that told you everything. Dumping data is how you hide, not how you inform. A good investor deck should be able to survive being read by someone on a train who missed the first half.
Come on, nobody ever got fired for over-disclosing?
No, but they got a worse valuation, which is the slow-motion version of getting fired. Here's the tell. If your investor call is just management reciting the numbers already in the press release, you've wasted everyone's 40 minutes. The release is the what. The call is supposed to be the so what. Why the number moved, what you'd do differently, where you were wrong last quarter.
Admitting you were wrong, that's the part CFOs physically cannot do.
And it's the highest return thing they could do. When you flag a miss before the analyst does, you buy credibility you can spend later. I worked with a mid-cap industrials company, I'll keep them anonymous, where we started every quarterly call with a what we got wrong slide. 2 quarters in, the analyst questions got softer because they trusted we weren't hiding the bodies. Credibility is the only asset on the balance sheet you can't audit and can't fake.
Isn't there a vendor selling software that promises to do all this for you now?
Oh, plenty. There's a whole category of investor relations platforms, and to be clear, that data comes from the vendors themselves, claiming their sentiment analysis predicts which shareholders will sell. Some of it's genuinely useful for targeting the right long-only funds, but no dashboard writes your story. The tool tells you the room is cold. It doesn't tell you what to say. CFOs buy the thermometer and skip the surgery.
So the CFO is the narrator, whether they like it or not.
Exactly. Every number you report is already a story. You chose which segment to break out, which metric to lead with, what to call adjusted. Pretending you're just reporting facts is itself a narrative choice, and usually a lazy one. The question isn't whether you're telling a story, it's whether you're telling a good one on purpose.
Give me the one thing a CFO can do Monday morning.
Take your last earnings call transcript and highlight every sentence that only restates a number already in the release. Delete all of it. Whatever's left is your actual message. And if that's under a paragraph, you now know why your stock is cheap. Rebuild the next call around the why, not the what.
The thermometer versus the surgery. I'll take it. That's a wrap. Fresh CFO briefings drop daily at mba-training.com.